Welcome, Paul. Thank you so much for joining us. It has just been the budget. What were your initial thoughts for Accountants and Bookkeepers when it came out as you were watching it?
I guess when I was watching it and I was speaking to the team at the time, I was sort of listening to it all and then started seeing bits. It felt like it was a budget of lots of deferrals. There's clearly some things coming in with immediate effect and some in 2026, but there's a lot of announcements that will come in sort of 27 onwards. The other thing that I sort of felt as well is the focus on collecting taxes, without any doubt, and the importance of digital transformation as well within HMRC itself. There was a clear statement in terms of direction of travel for HMRC. They want to improve the quality of records, they want to improve tax collection, they want to clamp down on where there's focus in terms of some of those areas where there's concerns over sort of the misreporting of taxes as well. So there's a lot in there, but the key thing for me was there's time. Accountants and bookkeepers have the opportunity to run through all of these different announcements, identify what it means for their clients, and then start to plan appropriately going forward.
Definitely. And as we've just spoke about, there was a lot not in the actual speech. So do you mind summarising some of those key points and then we'll go into them in some depth?
The big one for me, which I wasn't expecting an announcement on, was e-invoicing. There has been consultation on e-invoicing earlier in the year. I was speaking to HMRC about that much earlier on, but wasn't expecting was the announcement that e-invoicing will be mandated in a good few years' time for all VAT-registered businesses. So that's going to fundamentally change the flow of data between supplier and customer as well. And it's something we're familiar with at Dext because we already support it in Australia. We've got the legislation coming in France next year, and we're seeing it globally. So that wasn't announced, but will have a big change. I think the other thing to look at is lots of people were hoping MTD was going to disappear.
Yeah.
It's not going to disappear. There was some clarification, there were some sort of minor updates around a soft landing period for penalties for those in the 26-27 cohort, and there's a small group of taxpayers who will be exempt from 26-27, although they didn't actually clarify what that small group was. I suspect it's not going to impact many people. I think it's that continued focus by HMRC. We knew they were going to look at 5,000 more inspectors, and that was announced in the previous budget, but they're also focusing on actually incentives for informants to actually...
Yes, I was reading about this the other day.
Yeah, and it can be quite significant. It can be up to 30% where the tax collected is more than 1.5 million. That is a significant sum of money that they're focused on there. And I also think, reading some of the small print, I think we're at the start of HMRC very much focused on moving POE or self-assessment to maybe quarterly payments as well.
Yes.
And that would tie in with MTD and everything else. Those were some of the sort of bigger areas that I thought were fascinating in terms of seeing that, and also the importance of prompt and nudges effectively being built into tax software. They want to try and stop errors occurring right at the start of the journey. I think the number was 56 million being invested to improve the accuracy of financial records and data and preventing errors occurring before they're effectively making that submission.
So I think we all know that MTD is coming and we shouldn't be burying our heads in the sand and thinking, oh, they're definitely going to cancel it this time, because they're obviously not going to. So what are you seeing firms still getting wrong about MTD preparation?
The main thing that firms are getting wrong is they're not investing the time or dedicating the time that is needed to ensure a successful MTD rollout across their client base. Many haven't even started because they were hoping it will just get pushed back another year. Many haven't started looking at software products that may be suitable or considering what their clients' needs actually are. Now is the critical time that they have a dedicated strategy, dedicated team who actually can focus on ensuring that they meet their clients' needs. There aren't any surprises. So when you think, what are we? We're fast approaching December. Mm-hmm. Rule out December for a lot of people because you've got your March year ends, you've got your self-assessment. The window to get all of this done is closing very quickly, and for some firms they will have a huge number of clients where process is going to change. and they have to support those clients on that transition. Firms need to start, spending that time.
100%. And I was speaking to HMRC the other day, and what I don't think I had realised is it's based on the prior 2 years. So we've had a lot of clients that have kind of reached the 50k in sales, they've got a good net profit, so they've incorporated into a limited company. But actually now I need to go make a list of all those clients that I've incorporated and call HMRC and take them off manually from the enrolment of MTD.
Correct. One of the biggest challenges of MTD is to register your clients, you've got to do each client individually. It can take, 5 to 10 minutes per client. That is a process you have to go through, and you can do that now. And you have two options. You can sign them up for the current tax year, which is effectively joining the beta, or you can sign them up now in advance of 26-27. So you can get all of that administration out of the way so that when it comes in, that part's done and dusted, but you should really start focusing on how are you going to get all of this information in from clients? Which clients are going to need more support? Which clients are potentially, they're already set up because they're VAT registered potentially. So they're already using a GL. Everything's being dealt with on a quarterly basis anyway, requirements and things like that. Those clients are going to be less of a challenge, but there is a process you have to go through, and that process really needs to start now. And I would strongly encourage people to put some clients on the beta as well.
Definitely. And I think sometimes the way to transition for MTD is by segmenting your clients into sole traders, limited companies, landlords, etc. So can you walk us through what that process might look like in practice?
The segmentation part is so critically important. First of all, you need to know which of your clients are sole traders, are landlords, or have both. Because when you're looking at the legislation, it's income from both sources that can tip you over. Then the next stage is, in my mind, is are they VAT registered? Your landlord clients are probably not going to be VAT registered. A lot of it's just going to be exempt income. But you're self-employed. If they're registered, then there's a strong chance are they already, as I say, using a general ledger as we speak. Then you've got your list of clients who you know are going to be mandated. And really you should do that between 26, 27, 27, 28 and 28, 29. So you're putting them into different pots. But I also have a very strong view that just because someone isn't mandated until 28, 29 doesn't mean they won't benefit now from digital transformation and better record keeping. Not only benefits you as the firm, it also benefits your clients as well. But if we were just to focus on those into each of those individual pots, the next stage is how are you currently getting the information? Is it bank statements? Is it a bag of receipts? Is it an email? Is it a spreadsheet? So you've got to identify how that information is currently coming through. And then from there, you can then decide where the priority should be. That's just your segmentation of clients. You also have to consider what software is suitable as well, because I've talked about MTD a lot over the years. Everything up to the quarterly updates, I strongly believe you're going to use multiple solutions, because every client's needs are different. Post-quarterly updates, most are just going to stick with their existing tax software because all of the information for the quarterly updates goes to HMRC and you can pull it back into your existing tax software. So you have to consider your client's needs as well. For some, very straightforward. It will just be, we're just going to cash code from the bank statement. For others, they need more functionality. They may need a purchase ledger. They may need a sales ledger. They may want invoice creation. They may be VAT registered. They may not be VAT registered. They may want more advanced reporting. So there's a lot of different steps to go through. And even when you've done all of that, you also have to consider your pricing strategy as
yes,
well.
This is such a huge conversation at the moment, is how do you price MTD? MTD hasn't come around before. So how do you do that, especially as we move into 27, 28, where actually the threshold lowers and those businesses may not have more disposable income to pay for an accountant or bookkeeper?
Correct, and this is where you have to offer choice to your client. So many of the conversations I've had over the years is you support your clients on the software and the setup and everything else, but really they do everything and you're just there to do that final review. It may encompass a review of the quarterly updates. It may just actually be we're only involved at the finalisation stage. Then you've got your hybrid approach where clients may upload all of the documents, but you as the professional advisor will deal with all of the categorisation, ensuring that everything is being correctly dealt with, and then you deal with the finalisation of the tax return as well. And then you've got the we'll do everything for you service, and that's just here's a paper bag, or here's our records, and you will process absolutely everything for them. So you've got that sort of low, medium and high. That offers choice to clients, but then you also have to consider how many income sources they've got and how many transactions they've potentially got, because you could decide you want to go on to the most basic package, or let's say the hybrid package, and you only have one income source and you only have 20 transactions, let's say every quarter. The other person may also want to go on the same package, but they have 5 times as many transactions and they have 5 times the number of income sources. So although you're on the same package, you actually have variability in the number of transactions and the number of income sources, and that needs to be factored into the pricing as well.
Definitely. And so how should accountants and bookkeepers be positioning digital bookkeeping to clients? What conversation should they be having with clients that may seem reluctant?
What you mustn't do is start selling software to your clients and telling them this is what you have to do, this is legislation. You have to be having a conversation around the value and the benefits of real-time reporting. Ultimately, if you have more up-to-date numbers, you can advise and help your clients more. And ultimately, if you're positioning to your clients that you want to help them achieve their goals, but the way to help them achieve their goals is you need better visibility of the numbers, then actually you've moved away from this is a legislative requirement to actually if you were to do this, we can really support you get to where you want to get to.
So you flagged that HMRC are moving towards faster tax collection, potentially quarterly self-assessment payments, more inspectors and even high use of informants, which is obviously quite a shift from where we are now.
It is.
How should practices be preparing clients for the enforcement reality?
At the end of the day, accountants and bookkeepers are always there to make sure that their clients are compliant and doing things properly. I think in terms of the tax collection part, what we'll see going forward is many taxpayers or many accountants on behalf of their clients have often phoned up HMRC to arrange a time to pay arrangement. That's been harder over the last few years as it is, and I wonder how hard that will get. But for me, to address that problem, it comes back to real-time reporting and data collection, because there is no reason really why it takes 9 months after the end of a tax year to do the tax return and then go to the client and say, this is what your liability is, usually in January. The client goes, I wasn't expecting it to be that much. At the same time, they've also had their credit card bill from Christmas and they've had a lovely Christmas. At the same time, you're also giving them your bill. We have to move to a world where you can start advising clients much sooner of their liability so they can plan the cash flow implications, so there's no surprises. And that's one of the benefits of MTD as well, particularly for that cohort. So if you're doing everything quarterly, not only can you probably be a bit more accurate on the payments on account when it comes to the second payment on account in July, but there's the opportunity to discuss more around the pension contribution. Should you be making a pension contribution? Should you incorporate? Should you have been VAT registered? To address the issue, I think it's the regularity of record keeping for more up-to-date insights that allows the advisor to be more proactive, to let their client know. And there's no reason why you can't often forecast a good 18 months to 2 years ahead.
Yeah.
Because of the way the payments on account system works, that gives clients time to plan, in which case you don't need to spend that hour on the phone waiting to speak to HMRC for them often to turn around and say, actually, we don't have a 64/8 in place, or we need to speak to the director or whoever it may be. So there are so many benefits of that bringing everything forward. If you have better visibility, things shouldn't be wrong.
Yeah.
You know, things should be dealt with correctly at the time.
Internally, I'm a bit of a nerd and I love a spreadsheet. That's why I became an accountant. And we have internal tax trackers for every single client. So we use our software to do monthly reporting and basically give a liability at month end, what your tax liability will be. And that's done on a rolling basis. And that gets emailed to the client at the beginning of the following month. So they really have no excuse.
And that should apply to all taxes. You know, this should be corporation tax estimates. This should be self-assessment. This should be VAT. All of this is now possible, but only if you've got sort of numbers you can trust.
Definitely. And I've had some worried clients that they know that they owe HMRC money, they're on a payment plan, but HMRC potentially have announced that they will go into banks and take the money themselves. How
Yes.
do you feel about this?
At the end of the day, everyone should be paying the taxes that are due, but I don't think anyone should be put in a position of hardship. So I think you have to understand the reasonings why they may not be able to pay the tax before they go in and take that money. because there could be some unfortunate circumstances that have occurred. Let's say a director's just been drawing money out, also has a massive overdrawn director's loan account, can't pay the corporation tax, they've taken all of the money and they've gone and spent it on a nice holiday or something like that, then I actually think HMRC should have the powers in those sort of instances, because I think the system is being abused. My preference would be, before HMRC was to ever do that, they explore alternatives and they explore and understand the reasonings behind why this individual or why this business is unable to pay the tax.
Perfect. So you're also recommending firms strengthen their internal controls and implement them better. What does that look like practically, and what systems or processes should be put in place now? At Dext, we know that running a business shouldn't be about the busy work. You've set out to build something on your own, to make time, dream big, and do more. But receipts are everywhere. Invoices get lost. Your inbox never stops. Then you're stuck trying to make the numbers make sense. Dext is the all-in-one bookkeeping automation platform. It's simple, accurate, and all in real time. Just how bookkeeping should be. Your financial data right where it needs to be, with you finally building bigger things. Go to dext.com to find out more.
This all comes back to technology. Firms have got lots of technology now, but a lot of instances of where technology doesn't talk to one another, and therefore you have disconnected workflows. And something I often talk about is, I watched the film The Founder many, many years ago, which is on McDonald's, and they're all in the school playground and they're all bumping into one another, haven't got the right processes in place, they haven't got the right systems in place, and they haven't got the right controls in place. Bookkeeping and accounting is exactly the same. If you don't have the right tools in place, and you don't have the right people in place, and you don't have the right governance in place, then things go wrong. This is where firms really need to focus, and I think it's even more important, particularly with AI and the use of some of these tools like ChatGPT. You need to make sure that you have the governance, the controls in place, so that these tools are being used in appropriate ways, and they're not being used where sensitive information is potentially being released and things like that. It's about having a strategy, and importantly, having the whole team on board so that you have buy-in as well.
Yeah, 100%. And I think one of the things that was announced in the budget that definitely got most of my clients texting and emailing me was obviously the increase in the dividend and savings rate of 2%. So obviously the balance of dividend versus salary has always been quite complex to understand. Okay, if you want to take out 80k, well, maybe you should just be on a salary, but if you want to take out 50, maybe the combination is best. How do you feel the combination will be moving forward?
There's a number of different factors coming into this, and I was thinking about this last night, because I used to do all of the calculations, and it was nearly always beneficial to take your salary up to your personal allowance, and then you take dividends on top. But we also had the corporation tax changes probably a couple of years ago now. I'm trying to think when it was, and that started to shift it as well. And now we've got the increase in dividend tax. I wonder whether there's an argument potentially for some individuals where PAYE, a greater proportion of their income, should actually be salaried, and that has other benefits as well, potentially, because you don't need to worry about the cash flow as much from a personal perspective. Obviously, it gets paid over by your employer or by your business. That has cash flow implications. You've got more cash flow going out the door. So I think it's a case of, you've got to look at this on a client-by-client basis to see what model works best. I'm still all for making sure you use the nil-bait round for dividends, because that's just good tax planning at the end of the day. But you do need to rework the numbers. And that comes in from 2026 as well. In some scenarios, it does change that ratio. And the reason to look at it from a client-by-client basis is because often you'll look at transferring shares between spouses and the benefit of spreading that income across other individuals as well. Sort of raises another consideration as well, that often one of the reasons to incorporate was because it could be more tax efficient. That may actually deter people from incorporating, partly because when you do incorporate, there's higher fees often because of the statutory requirements to file the accounts. And there's also the niggle at the back of many people's minds with the Companies House reforms and the filing of potentially a profit and loss for all entity types from your micro upwards as well. And some people just won't want that. On the flip side, there's also other commercial reasons why you would incorporate. All of this needs to be looked together.
Talking about AI and looking towards a good AI implementation in a practice, what does that look like and what should firms be looking for? I think as accountants, we may get something called shiny software syndrome, where we think that everything is amazing and we should just get whatever looks brilliant. But actually, how should we be purchasing softwares with AI and how should we be implementing them into our practices?
You need to understand what the challenges are that you're trying to solve first, or where the problems are, or where the opportunity is to automate or improve some of your existing workflows or some of your existing tasks. It is very easy to suddenly see AI and jump on it, and then you sit back and realise it's not really done what you wanted it to do. So this comes back, for me, you need that dedicated team to really analyse and understand what the requirements are. And it's often one of the hardest challenges for firms. I was very lucky, although I was a partner in a firm, I was probably 50% non-chargeable, because I would focus on a lot of the technology and the tools available. And even with Dext, we have AI agents coming very, very soon. It's something I'm looking at. There's lots of talk around AI, but people need to understand the practical application and the usage of these tools. It's doing that research and then understanding what the rollout plan is and where it can be used and how it should be positioned. AI isn't there to replace anyone. It's there to complement the tasks that you're performing and freeing up time and improving accuracy. What I found even before the sort of all of the AI stuff is if you don't communicate this well with your team and your clients, it can scare people and it can put people off. And we still have challenges now where clients don't have bank feeds.
Yeah.
Concern I have at the moment is if we can't get people to have bank feeds or use some of the automation tools now, why are they suddenly going to jump onto all of these new AI tools? I suspect they won't. And that's why education is so important.
100%. And with all these changes, how does the relationship between client and accountant look to evolve, in your opinion?
I think this is the really exciting part. I actually think the use of AI, the use of cloud technology allows for more interactions. And the more interactions you have with your clients, the more conversations you have, the more snippets of information you pick up. That allows you to really start supporting your client. So I think what we'll see over the years is a real shift in the role of the accountant to more of that strategic advisor, that person there to help and support their clients because you have up-to-date numbers. So I think the opportunities are significant. It raises a wider question is what does the future accountant look like and how the professional body's looking to train the next generation of accountants and what skill sets are needed.
Amazing. And so to any accountants and bookkeepers feeling overwhelmed from the budget, how would you suggest they go around communicating changes with their clients? Would you say they should do it client by client and send everyone a personalised email? Should they be sending a newsletter? What should they do?
There's probably a bit of everything. In practice, we would always do a budget breakfast seminar, a budget lunch update or something else. But then we expanded it and called it tech and tax. We did it partly because you never knew until recently what was in the budget, but they used to tell, now we seem to have an idea of what's going to happen before they've even announced it. But clients are also interested in the text. So when you combine it with tax that clients are always interested in, there's a lot to talk about and they are very much connected. How do we help you mitigate your tax? Well, we need you to start using tech and have better numbers and things like that. So that's one part. Others, definitely newsletters. And then it's also conversations. If there's something critically important, particularly with the change in the dividend rates, there may be an argument with some clients to accelerate dividends into this tax year. It just depends on their scenario and depends on what's possible. But I remember that happening when dividend rates went from 0% and we had this new 7.5%. We had a lot of clients who wanted to accelerate dividends. That just got credited to their director's loan account and that they withdrew over a number of years and things like that. For some clients, it'll be picking up the phone. For other clients, they will be less impacted. But I think with all of the conversations, you should always be mentioning, was there anything in the budget or that you wanted to discuss, or were you aware of this? Because there was a lot in the budget this time round.
Yeah, 100%.
And it's important to communicate and it's important to show that you're proactive and it's important you're actually doing everything you possibly can for your clients to put them in the best position possible going forward.
And if an accountant or bookkeeper is feeling a bit nervous or overwhelmed with all of the information, where would you suggest they go to digest it for themselves so they can have that clear communication?
So there's lots of different options. There's webinars. I'm doing a webinar this afternoon with Paul Applin, who's an incredible person when it comes to tax. There's your professional bodies, whether it's ICAW, AAT, ACCA. There's lots of material on their websites to really digest it and break it down. You can also just go straight to HMRC pages, and their content is so much more user-friendly than it ever used to be in terms of understanding all of that. Often speaking to your peers. So there's lots of opportunities to sort of talk to one another as well. The key thing is it's finding what works best for you, and it doesn't matter which path you take as long as you're getting the material and the insights that you need.
Perfect. Well, thank you so much. Is there any last words or pieces of advice that you would like to share?
I think at the moment it's a very overwhelming with lots of things going on, whether it's the budget, whether it's digital transformation, whether it's legislative changes with MTD. I think the most important thing for me at the moment is making sure you've actually got time for yourself. So remember to switch off, remember to take breaks, and not everything is critical, not everything has to be done there and then. So try and find that sort of me time, because otherwise, you'll burn out and things can get a lot worse.
Perfect. Well, thank you so much for coming on. I really appreciate it.
It's a pleasure. Thank you.